Are you serious? Hey! We always do that. But we always get the problem in the beginning.
Are you guys sure you want to do a video now, or is that something you want to do later? It's not now.
That's what we always get. What's up, everybody? How are you? Rob Younce, Stephanie Adams.
Hey.
How are you?
How you doing? Happy Wednesday.
So what you been up to?
I'm so sleepy.
Are you?
I feel like I actually slept last night.
That's good.
But
now it makes you sleepy.
Yeah, when you haven't slept peacefully in days, your body's like, but let's go back and do that again. So
you're sleeping.
Yeah.
Probably should have got you some coffee or something.
An espresso.
Wow.
This is weird to actually talk. We have papers in our hands.
Yeah, we actually have stuff to talk about,
Yeah.
like planned.
Like, kind of.
Yeah, well, it is.
And it's thanks to you guys. Last week we came up with this idea.
Yeah, we actually got some really good questions and some good information that we put together to talk to you about today about a subject that's really not very fun.
It's not.
Kind of painful and kind
but
of...
It's real life.
Yeah, I mean, people face it all the time, so why don't you tell everybody what we're going to talk about?
So we're going to talk about people who have obviously had hardships in the past. Sometimes are forced to short sell their house or do a deed in lieu, or they've gone through bankruptcy and those kinds of things. So it's not the most positive, but there's positivity on the end of it. Where
Correct.
You just need to be able to plan for, based on the experiences that you've had, what to do moving forward.
Absolutely.
So, and I definitely couldn't do this on my own. I needed to know what your procedures were. So that's what we're doing.
Yeah, so, if you've had an issue before, let's start with the foreclosure process. So, and I think one of the reasons why this is going to be very important, not only to people who've had it in the past, but unfortunately with all the economic hardship that's happening, hopefully you might be able to draw some knowledge from this and develop a plan for you moving forward, because it really is, it's going to be a reality here soon for some people. We've talked about forbearance and, coming out of forbearance, people that were forced to make that decision. As we come out of this, you may get a balloon payment that has to be made.
Which is incredible.
Yes.
Like, it's just, I don't know how people are going to be able to do these
Right.
payments. Because you're talking about like a year,
Right.
6 months to a year, and all that. Okay, so it's a lot. But what we've kind of put together is, if you will be facing these, here's the time frame that you're going to have to wait before you can buy, or people who have previously been through these situations, you could potentially still be.
Yeah, so on the mortgage side of things, when you've had a foreclosure, let's back up a little bit. Let's talk about from the credit side of things.
Yeah.
People that might be facing this, what do they do? What do they do on the credit side of things to best manage it? I know one of the things you're gonna say is, as you always do, as far as being proactive.
Yes.
You miss a payment or two.
Yeah.
With your mortgage provider.
Yeah.
What do you do?
Contact your mortgage provider.
Immediately.
So, but I will tell you, so this is actually what I see you, Sean.
Hi, Jim. Hey, Bobby.
This is actually what kind of put me into credit repair, was that I did have a foreclosure, and I did contact my servicer, and I told my servicer, like, listen, I think, and I wasn't even having a problem at the time, but I told my servicer, I was like, listen, things have changed, and I think we're going to have a problem moving forward. And they said, well, you actually have to show that you're having a problem. My situation is different than a lot of people's situations, but we actually had to show that we were having a problem, and then for us to be able to show it meant we had to go late.
Right.
So if you're already in that position, and you're going late, you're going to want to talk to your servicer about a modification, but you are going to have to show, most of the time, 3 consecutive late payments before you're going to get that modification. Now, to your credit, what that's going to look like is late payments. There's just no way at that point for them not to say, oh, well, everything's perfect, why would we change your payments, and so we're going to make less money on you, why would we do this?
Right.
They have more of an incentive to work with you if You still want to work with them. You're still willing to make payments, but you can't make as much. But you have to show them you really need it.
Well, one of the things too, when you call that servicer, you know, you get a lot more bees with honey.
You do.
And if you're nice and you show that you're trying to be responsible, they are going to be more likely to work with you and do something to help you out versus the person after you're 6 months late and you call up and you're yelling and acting like it's their fault.
Right.
So what else should they do inside of that process? So let's say it goes further on and the loan modification process starts. What happens there from the credit side?
After the loan mod? Okay.
Yeah.
So you're still going to see those late payments, and you'll likely see them for a good 6 months. You'll see those those late payments because you have to show at least 3, and then during the modification process, you're going to probably see another 3 while the loan is being modified. Then you'll start seeing the new loan will pop up. But when it does, it will say that it's been modified in the comment section, which is kind of a cue to some other lenders, like, hey, this person signed on for something that they couldn't actually handle.
Right.
And then after years, it kind of goes away. That comment goes away because then you've made your payments.
So let's say, that's loan modification. That's one of the things, again, if you think about it from your servicer standpoint, they're not in the business to take homes.
Right.
They're not in the business to take homes and resell them. That's not their business model. They will if they have to.
Right.
If they're put into a corner, but for the most part, they want to work it out so that you can continue to pay them.
I mean, yeah.
So let's say, we have somebody that doesn't follow our advice.
Why would you not?
I know.
But
She's so good with advice.
It's fine.
So they get further down the line without having contacted their servicer. And let's say maybe they've gotten a notice that there's going to be a foreclosure.
Yeah.
Let's say they ignore it, they bury their head in the sand because there are those people, they think, it'll go away or, I'll make it up somehow without having a real plan.
Right.
What then?
Your house is going to be gone.
Yeah.
At that point, once you bury yourself for so long, to try to scramble to get it all caught up is crazy. And I'll tell you, in my situation, we actually had the money to catch that loan up. But remember, we were trying to get that modification.
Right.
We had the money to catch the loan up. But, this is going to segue into the next option. But because at the time that we had our foreclosure, the house was technically underwater, they said, no, we're not going to take that money, you're too far behind, and now you're done. It was horrible, horrible lending. It was horrible customer service on their part. But once I got into the business of understanding how bankers make their money, how the big institutions make their money, it kind of clicked. Like, I understood what was going on.
Right.
So that kind of takes us into if your house is underwater, chances are you're going to foreclose.
Right.
Like, that's it. You pack up your stuff, find yourself a rental, and then prepare yourself, if you want to be a future homeowner, prepare yourself to buy in the later years, which we'll talk about in a minute. But if your house, you can't afford your house anymore, and you know you can't afford your house anymore, but what you owe on it, if the bank could potentially make money selling the house, then you have what we call is a deed in lieu of foreclosure.
Correct.
Where the bank can then say, okay, bring us your keys. Now, that's not going to happen without some kind
There's
of
a lot of
fees,
conversations
and
going back and
stuff
forth.
happening
Yeah.
there. But where the bank will basically say, bring us your keys. We're just going to take the house and you can go about your business. And they're going to do that because they can then sell that house.
Because there's some equity there.
Yeah.
Right. There's some equity there. Maybe you can't sell it, or you don't have the assets or the total equity to do a short sale.
Right.
So, first of all, explain to people a little bit about what you mean by underwater. What does that mean? Can you elaborate on that?
So if you owe more than what the house is worth, your house is, there's a lot of different terms where it's flipped upside down, it's underwater.
Yeah, so you buy it at the height of the market, and maybe there's some things that happen that, the price goes down. Because, like your credit score, home values, ideally we'd like to see home values just go straight up.
Right.
Not always the case, right?
So my foreclosure happened during the market turn a few years ago. So when we bought our house, it was, I mean, we probably looked at 20 houses. I'm 8 months pregnant at the time with my first son.
Right.
And I was like, can you just put me in a house so I can stop staying in all these houses?
Right.
And the houses were on the market for 2 or 3 days and then they were gone.
Right.
So we actually overpaid for a house.
Mm-hmm.
The market tanked
Mm-hmm.
with all the bailouts and all that stuff. The market tanked. And that was the point where I said, hey, I think we've seen some changes. We've got to
Sure.
do something about this. And they were like, yeah, your house. I'm not even
How did
sure
we get a
bad.
phone call?
I don't,
It's
says
on
do not disturb.
Unbelievable.
Whatever.
So that's Jeanette Freeman. She was a buyer of mine. It was really, really awesome to work with. Hey, Dean. Hey, Bob. How are you? So obviously you can kind of wait until it goes to foreclosure. That's an option, I guess.
It is.
But also the short sale.
Yeah.
Short sale is kind of, you are underwater, or the equity from the total transaction, you may actually, as the seller, have to bring money to closing. So, when you pay all the commissions and things like that to the realtors, it could be that you have to bring $5,000 to close that loan,
Mm-hmm.
but it's off of your hands, right? Without a major ding on your credit if you've made all your payments on time.
If you've made all your payments on time. Short sales hurt credit more when you decide to not make your payments as you're going through that
Right.
process, which, depending on what the market is doing at that time, it could, and if a lot of it is waiting for the bank to agree
Absolutely.
to that short sale amount. But while you're going through that process, you have to make your payments on time, or again, you're going to tank your credit.
Yep.
And then it's still going to take you time to rebuild. But at the end of a short sale, make sure that you're checking your credit, because at the end of the short sale, or the end of a foreclosure, or the end of a deed in lieu, when you look at that trade line, that's what we call them as trade lines, as you're looking at your credit report, it should say zero.
Correct.
It's completely
Zero
zeroed
balance,
out, you're
right.
good to go.
Right. Yeah, and that's something, that, again, the overall theme that I think we put out is being very proactive,
Yeah.
acting ahead of time, anticipating things. So if you do have any questions or, on anything we've talked about so far, again, it's a sensitive topic. You may not want to throw it out there, as far as, making a comment down below. But if you want to have a question, or if you have a question on any of that stuff, you can put it in DMs or whatever that we
reach
can help
out.
out. If you do have any general questions, put those in the comments, because we'd love to hear from you. So that's really on the credit side. So, I know we kind of gloss over it to a certain extent because it's not always that easy. There is a lot of stress.
Right.
So to have an expert that can help guide you through the credit part is vital. And one of the things I want to, while she's over there smiling, I wish I would have timed this better, because this would have been so good. That's why, her sharing her story of how she got into credit is hugely important to me, because that's how she handles all of her clients.
Yeah.
She is very transparent. She's very open. Part of what she does on the credit side is a do-it-for-you or a done-for-you system, or you can do it yourself.
Yeah.
Stephanie does a lot of things for clients that most
Yeah,
credit
yeah.
people don't, and
Yeah.
you don't get the pat on the back for the
Yeah.
love. That's why I'm constantly heaping it on you, because you're really, really good at what
All
you do.
these closings and nobody mentions the credit lady. Guys, hello, I was there.
Daggone credit lady. Actually, I'd put you in the video. You'll go back and see this, but I described you as our credit nerd. So
Oh, thanks
You're
so
welcome.
much.
You're welcome.
My God, I'm going to start wearing my glasses.
So,
Okay.
so the neat part of this is that you can actually exit this part of the, you can actually exit a foreclosure or a bankruptcy. We haven't even touched on bankruptcies yet. But you can go through a foreclosure, and as the analogy that I make with regards to credit is, your credit is like the tide. There's a high tide and a low tide, and
Yes.
certain times your credit score's higher. There's things that happen where your credit score gets lower. As you get out of a foreclosure or deed in lieu or a short sale and miss payments and things like that, as you get time away from it, we call that seasoning. As you get that seasoning,
Salt and pepper.
salt and
Little paprika.
as you get away from that, salt and pepper and paprika, you're going to see your credit score start to rise up again. And one of the things that we talk to buyers about all the time is that it's not, you don't have to rent for the rest of your life.
No, you don't.
Just because you've had one of those events. As you get time away from it, your credit score goes up, and there are waiting periods though with each of these events that
you have to be able to prove that this isn't going to happen again.
Yeah, think about it from the bank standpoint. Banks are very the end investors tend to be very conservative on things. They want to make money. That's why they're in this.
Right.
It is a big risk because in essence they're fronting you $200,000-$300,000 to buy a property. On the mortgage side of things, there are waiting periods on these events. I mean, we need to show that you're a responsible buyer again.
Right. Okay, so let's talk bankruptcies quickly.
Okay.
You have a Chapter 13, Chapter 7?
Yep. Tell the difference between the two.
Chapter 7, done.
Walk away.
Walk into court, say, I can't pay this stuff. You do have to qualify
Dealer
for it.
clap, I'm out.
Yes,
That's
done,
it.
done. Vegas, baby. You do have to qualify for it, and a lot of people don't realize you do have to qualify for it, Chapter 7. When you can't just be like, I don't really want to pay this anymore, so I'm kind of done. The judge will look at you and be like, yeah, okay, sure. So oftentimes we're seeing people in a Chapter 13. Chapter 13 is basically like they're going to restructure everything, and then they're going to kind of come to settlements with your creditors, and they're going to say, okay, we have to pay this person and this person and this person, and then we'll discharge your bankruptcy. So there's two different kinds of bankruptcies. So let's talk about what happens after those are discharged.
Okay, so on the mortgage side of things, after you've had a bankruptcy, you have to wait 4 years on a conventional loan. So if you want to go and buy a house with 5, 10, typically 5, 10, 20% down, you have to wait 4 years from that discharge date.
And conventional loans are loans that are not government backed.
Correct.
So
correct. On the Chapter 13, you have to wait 2 years from discharge date, or if you filed it and you didn't qualify and they dismiss it, they're counting that just like a Chapter 7, and you have to wait 4 years there.
Okay, so dismissed will still show up on your credit report. Even though you didn't go through anything that's required in a bankruptcy, it will still show up as a public record as dismissed. It will still ding your credit. So please, please, please be careful when you go to file those paperwork with the court, because
make sure you're careful and make sure you qualify. Because make sure, again, if you owe $50,000 in debts and you have $2 million in assets, probably not going to qualify.
No.
They'll make you liquidate assets in order to pay that.
And then also, if you do get into a Chapter 13 where you're supposed to be paying these creditors and you decide not to follow those rules, it will turn into a dismissed bankruptcy.
So be very careful. And again, when you're, these aren't easy decisions to come to.
They're not.
But make sure you go in, again, if you need information and good guidance and another opinion, and making sure you know the steps that are involved. Obviously there's bankruptcy attorneys.
Bankruptcy attorney's probably better than calling me, but I'll definitely talk to you about some of the little things that I know about.
And you might not have to go through it.
If we can find a way for people not to have to file bankruptcy, we absolutely will do that. And SOS has tons of services for that to get people back on their financial.
Absolutely.
So after bankruptcy, in a conventional loan, it's how long? It's 4 years.
So it's 4 years roughly. Yes. On Chapter 13, it's 2 years. So that's a little bit more manageable. On the FHA side of things, which again they take a little bit less down on the down payment, a little bit softer credit. You're looking at 2 years at time of case assignment.
Okay.
So once your case was assigned, it's 2 years from that point. So again, if you're paying down a Chapter 13, they're going to want to see a clean payment history, which, again, if you think about it from a logical standpoint, that totally makes sense, right? You got to pay your bankruptcy in order to be able to get approved for a home.
Right.
On the VA side of things, it gets interesting. So Chapter 7 is 2 years from the date of closing, and then at least 12 months on your Chapter 13. So there has to be some extenuating circumstances, and again, VAs are a little bit more lenient, a little bit more of the old school type of underwriting.
Right.
But the general rule for that is it has to be at least 12 months because that is the time that we can show a satisfactory payments and reestablish credit and things like
Right.
that. So,
That's key, though, is
Yes.
you have to remember to reestablish your credit. You
Yes.
have to learn from the mistakes of the past. So if you want to try to get a mortgage and you haven't learned and you've got late payments still and you've got that kind of, it ain't gonna fly, guys. So
yeah, they're not going to like that very
learn
much.
from your bankruptcy. Don't file it otherwise.
Yep. So that's on the bankruptcy side of things. And again, the reason we bring that up is because we want you to know if you did have an event like that in your past, it doesn't, it's
It
not.
ain't over. You
Yeah,
can
it's
still get a
not a
house.
death sentence
Yeah.
to your home ownership.
Mhm.
You just have to jump through some hoops and you have to do the right thing. So, we're here to guide you on that. And
Considering, FHA and VA only making you wait 2-3 years,
It's not
it's
terrible.
really not that bad.
yeah, just get out of bankruptcy and do what you're supposed to do.
Right, and it's a good time also during that time period to start saving some of that money.
right.
Obviously rebuilding your credit, that kind of stuff. Take that time to really create a plan. Talk to somebody who can help you create a plan. And then when you show up at Rob's office, you've got a whole portfolio of how beautiful and awesome you are and all the mistakes that you made, they're gone. And you can give that to Rob and he's good to go. So definitely create a plan and start working from it.
So when you get to foreclosure events, it gets a little bit longer. So, looking at foreclosures on a conventional loan, 7 years.
Oh,
So that's a long time.
it is.
Now, the nice part is when you get to FHAs, it's 3 yees. Typically, FHA is a little bit more lenient.
You know what's funny about that 7 year?
What's that?
It'll be off your credit report by then.
Yeah, go figure.
It's like
That's how that works,
Yeah.
right?
It's not even on there anymore. It's gone.
VA, general rule on the foreclosures, 2 years. There are some guidelines where you can get it for after 1 year. Again, I don't want to go through every particular case, but if there is a chance to get it on a 1 year, reestablish credit, making sure everything else is I's dotted, T's crossed, walking in a straight VA line as they would like their military buyers and veterans to operate on. So, there are some things on there that you can get into extenuating circumstances, and it's not. We can get it a little sooner. So, if you have a unique situation with regards to a foreclosure, reach out to me and let's talk about it and let's see what that looks like, because I know there are exceptions out there. Again, they're exceptions. They're not general.
I think it's worth it to just have the conversation.
Yeah, you need to have the conversation to figure it out.
Yeah.
I agree.
Call me. Just flips out. Sorry, I do it all the time.
On the pre-foreclosure side, the short sales, the deed in lieu, a little bit less because it shows your ability to kind of work things out. So on the short sale side of things, conventional is 4 years from the deed date to the new note date. On the FHA side of things, 3 years. On the VA side of things, 2 years, but there are extenuating circumstances with VA as usual that allow you to get down to 1 year of separation there. So, there are options, and that's the whole point of today, is we wanted to make sure everybody knew that there are options, because unfortunately, given the economic climate, people might be faced with these decisions.
Yeah, things
soon.
are getting ready to happen.
Yeah, and if you're in a position where you're starting to feel that pressure, we encourage you to reach out.
Absolutely.
Stephanie helps with budgeting. She's helped several of my clients with budgeting, help them get prepared, not only credit-wise, but financially to buy a house.
Yeah.
We have one right now that's working through some of this stuff from a previous issue she had. So, it's not just credit. And on the mortgage side of things, it's not just mortgage. We care, and we want to make sure that you get the best guidance possible.
Right. Gotta have a game plan.
Correct.
Yeah. So if you're in this situation now, it's not a death sentence. It sucks. Am I allowed to say sucks?
Yeah, you can say sucks.
Okay. It sucks. And it's never easy to admit that there's a financial issue. But like I said, with a good game plan of how to make sure that this doesn't happen to you again, changing your financial habits, living within means, that kind of stuff, will set you up for when it is time to come back around to buy a house again. But definitely proactive. We talk about it a lot. Be proactive. Face what's going on right now, deal with it, and then create a good game plan moving forward so that this never happens to you again.
Absolutely. I agree 100%. If people want to reach out to you, how do they reach you?
SOS Solutions on Facebook.
Mm-hmm.
SOS Credit Solutions /review is my website. You can go there and you can schedule an appointment to talk to us. You don't even have to, you can call 757-356-5756, but if you just want to get on our calendar and have us call you, well, you can do that too.
That's been really helpful lately. I know some of my clients that I've sent over to you, it's been easy for them because not only, hopefully they're working during the day, so
Yeah.
they don't exactly have.
They put it in on their time.
Yeah.
Mm-hmm.
Yeah. Good. You and Jesse over there do a really, really good job.
My Boston girl, I love her accent. I do. Every morning I'm like, I need to know about my car. How's my car? I love Jesse. All right. So Rob Younce.
Yes.
How the heck do we get in touch with you?
You can call me, 757-286-8912. You can go to my website, robyounce.com. You're on my Facebook account, which I'm just Rob Younce on Facebook.
YouTube.
YouTube,
We're connected at this point on YouTube.
We are.
Yes.
And I've got my own name, which is Rob Younce on YouTube.
I'm Stephanie Adams on YouTube.
I'm Stephanie Adams on YouTube.
Yeah.
Crazy how that works.
There's a lot of information out there. So if this is your first time watching one of our videos together, what are you doing? No, go through and watch some of the previous ones. But if you want to do like a full-on study, you can check out our YouTube videos because we're super transparent in everything that we do. There's no secrets here. I don't have any secrets. So make sure you watch those videos, and if you want to do it yourself, do it.
By all means.
You can't get a mortgage by yourself.
You can't do that. But we're here to help. We just want to make sure that people are watching this that need help can get it.
Right.
So reach out to us. We're happy to answer questions. Like, comment, subscribe, all of that.
So
Ask
weird to
questions.
say.
I know.
It's
Ask
funny.
questions.
When you're on YouTube and you're watching the YouTube, you're like, yeah, guys, like, comment, subscribe. Make sure you stay tuned. And I'm like, can you please just hit the button?
Yeah, just like it.
Yeah.
Like it.
Make me feel good.
It helps people find us.
It does.
So, any questions, reach out to us. Until next week. Peace.
Will you be
See
here
you later.
next week?
I will be here next week.
Do you know next week I will officially be 40 years old?
Wow. We might have to have a party for that one.
I think so. I'm going to wear a party hat.
All right, so if you're watching this one, make sure you tell everybody to tune in next week so we can help celebrate
It's my birthday.
her birthday. All right, thanks a lot, guys.
Bye, guys.
Appreciate it.